Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions. This is Market Insider TV and our opening commentary. It is Wednesday morning, July the 9th. Thanks for joining us as we take a look at our trading day ahead. All right, let's take a look at some of the news here this morning. I'll be doing RFD TV Wednesday, Thursday, Friday morning this week. So today, Thursday and Friday, I was on WHO Radio. Yesterday, I'll be on again, recording it Friday afternoon. I think it comes out, airs on Saturday morning sometime. Overnight dollar index a little bit firmer in here. Natural gas falling back into some new low territory. The crude oil is down slightly. It's been mixed and two-sided overnight, and the stock market is firmer here. Corn down 2, beans down 4.5, wheat 1 to 2 cents weaker across the board in the wheat. You notice I have big gains in the cattle market yesterday. One thing I noticed from a lot of people on Twitter and people calling in, they want to buy grains and sell livestock markets, sell the cattle, sell the feeder cattle. This is a trading counter trend. Obviously, the trend is down in the grains. We're at contract lows in corn. We're contract highs in the cattle, feeder cattle. Some people just want to pick tops, pick bottoms, and lose money, apparently. But hey, it can work sometimes. Main thing when you trade, if you're speculative trading, main thing is the trend is your friend. Trade with that trend. You can try and pick tops and pick bottoms, and maybe it'll work for you. In fact, I wouldn't be surprised to see corn and beans stage some sort of a rally here in the next day or two on some short covering ahead of Friday's reports. But that's not the way to be consistently successful. So let's look at markets in here. Check us out online at MidwestMarketSolutions.com, where you can sign up for our text message service, our daily newsletters that have trade recommendations as well as hedge recommendations. The list of our offices there are also available at our website, MidwestMarketSolutions.com. Weather maps continue to call for nearly ideal growing conditions. Now we're out through about July the 19th. So we're looking at 6-10 day, 8 to 14 day maps. We're going to get through pollination on a big percentage of the crop. 50% of the crop should pollinate by about July 20th, and it's going to be under greenhouse type conditions. It's going to be a monster crop in a lot of areas, but have we removed too much weather premium for this time of year? I mean, yes, Iowa ratings are 86 good to excellent, one of the best that state has ever had, highest since 1994. But Illinois is only about 56% good to excellent. That's a far cry from even average. It's well below average, and a far cry from what they would love to see in Illinois. And if you're going to produce a big crop, and some people are throwing around 188, 189 national yields, you're going to have a better Illinois crop than what is rated right now. So I'm not in that camp, but I think you could see small increase eventually here in this corn production numbers. In fact, here's what the U.S. or what the trade estimates are going into Friday's reports. That report comes out Friday morning at 11 o'clock. Looking for slightly smaller production, right around 15.8 billion bushels. Yield is expected to be virtually unchanged from a month ago, 181.1. USDA has cut corn yields 6 times in this July report, but they've only raised yields 3 times. The last time they raised yields was all the way back in 2003. I think it's probably too early to raise these yields, especially with Illinois showing some issues. So I think odds are that they leave things unchanged in this report. Soybean production forecast 4.329 billion bushels, again virtually unchanged from last month, and yields just 1/10 of a bushel smaller than a month ago. Now the USDA has cut soybean yields 5 different times in history. I don't think this year is one that they will. I don't think they cut corn or soybean yields this year. The USDA has never raised soybean yields in this report, and it's unlikely that they would at this point in time. There's still a fair amount of soybeans left to be planted this year because of the late winter wheat harvest. So way too early to talk about raising yield potential at this point in time for soybeans. All wheat production expected to be down slightly from last month, 1.912 billion bushels, and ending stocks. Let's look at them. Should be a little bit tighter for corn at 1.733 billion bushels. Again, that's not a super tight number, not something that tells us we really have to ration demand. It's a decent number, kind of tighter than last month. As carry in stocks expect to be tighter from the old crop category. Soybean ending stocks could be maybe 10 million larger than a month ago, and wheat just virtually unchanged compared to last month. So not much in the way of expecting or anticipating major surprises in this report. Cattle Facts show list down 7,400 head, 223,000 head. That has cash looking higher this week to me. Now, we could see low profit taking setback in the cattle on the opening. Could see some short covering here in the grains. That's certainly possible. But I think the cash trade, as I've been saying last week, for this week, we're going to see higher cash trade this week. The packer margins are in the black. Cutouts are trading higher. They are going to ramp up their kills after the 4th of July holiday here, for at least for the near term, while they have some positive margins. That'll push us higher here. We've made new highs in the feeder cattle markets. Live cattle, we're knocking on the door of new highs. I didn't think we'd actually get up into this strength this quickly, but here we are. All right, sign off here, but wish you a wonderful day of trade. Hope you have success. Good luck, everyone, and as always, reach out to us. This has been Brian Hoops from Midwest Markets. Talk to you soon.